I, Uma Agrawal, welcome you all to the online lecture series organized by Gokhale Education Society's BYK College of Commerce. Today, we would be going through the topic of rectification of errors, its meaning, reasons, need, and types of errors. Adverting to introduction and meaning. Rectification of error is referred to as the procedure of revising mistakes made in recording transactions. These mistakes can occur while posting entries to ledger accounts, classifying accounts, carrying balance forward, etc. Rectification of errors is basically of two types. One of the most common types of errors are committed on both sides of an entry. This does not influence the trial balance and can be rectified by making a journal entry. These mistakes can occur while posting the general entries to the ledger accounts, classifying these accounts, and carrying the balance forward, etc. Reasons of errors: lack of accounting knowledge. An accounting system is how a business plans its operating budget and tracks its expenditure and receivable or income. An accounting system also may handle payroll, taxes, and other business accounts, including workers' compensation, health care coverage, and other benefits. Functions of accounting can be handled in-house or contracted out to a certified public accountant. Failure to proper manage an accounting system can result in financial disaster. Second reason, wrong data collection. Data quality is becoming increasingly important and should be a top initiative at every organization. Poor and incomplete data collection can lead to a loss of revenue wasted media dollars and inaccurate decisions making. A lack of quality data causes inability to accurately assess performance, sales, and the converting customer. Poor data input leads to poor decisions making and has a direct impact on performance. Third reason, wrong recording. An error of original entry is when the wrong amount is posted to an account. The error posted for the wrong amount would also be reflected in any of the other accounts related to the transactions. In other words, all of the accounts involved would be imbalanced but for the wrong amount. Fourth reason, incorrect arithmetical calculations. Arithmetic mistakes occur because the rules about orders of operations are misunderstood or ignored. There is no reasons to make arithmetic mistakes. Learn the facts and the rules and use them. Be specifically careful how you enter calculations in your calculator. Need of rectification. First, to present the correct accounting information to show the accurate profit or loss made during the year by preparing the profit and loss account, to disclose the true financial position by preparing the balance sheet. Types or classifications of errors. There are mainly 4 types of errors. Number 1, errors of omission. Number 2, errors of commission. Number 3, errors of principle. And 4, compensating errors. Errors of omission. When any of the transactions are not recorded completely or get partially omitted, they are referred as errors of omission. These are classified into two types: error of complete omission and error of partial omission. Adverting to types of errors with example are errors of omission. These are caused due to complete or partial omission. First, type subtype with examples. Error of complete omission. Goods sold to Aditya on credit but not recorded in sales book. Partial omission. Goods sold to Aditya on credit, recorded in sales book but not posted to the account of Aditya. Thus, sales account is credited but Aditya's account is not debited. This error will affect the trial balance. Errors of commission. Error of commission is an error that occurs when a bookkeeper or accountant records a debit or credit to the correct account, but to the wrong subsidiary account or ledger. This error affects the agreement of trial balance. These errors are classified as errors of recording, errors of casting, errors of carrying, and errors of posting. Classification of errors with example. Number 1, errors of recording. Goods purchased from Chaitanya for rupees 850 was recorded as 550 in the purchase book. This error will not affect both the accounts, purchase account and Chaitanya account. Second, wrong totaling of subsidiary book. Purchase book has been undercast. Total taken less by rupees 500. Purchase account will be debited less by rupees 500, decreasing the debit side of trial balance by rupees 500. Third, error in totaling or balancing of ledger accounts. Credited account has been undercasted by rupees 700. In this case, credit balance of trial balance will be less by rupees 700. Error of posting. Posting to be to the wrong side, but correct account. For example, goods sold to Rohan for rupees 900 and to the credit of Rohan account instead of posting to be debit side of his account. Posting with wrong amount. First and second, posting with wrong amount. And third, posting twice in an account. Fourth, error in posting to the wrong account but correct side. Error in carrying forward. Total of purchase book is rupees 1500 is carried forward as rupees 1250, creates less debit of rupees 250 in purchase account and also less debit in trial balance. Error of principle. Error of principle are often simple accounting entries recorded in the incorrect account. The amounts are often correct, unlike an error of original entry. Oftentimes, the error of principle is a procedural error, meaning that the value recorded is correct, but the entries are made in the wrong account. These types of error can be difficult to identify if they occur because they can still lead to appropriate balancing of debits and credits on the balance sheet as well as appropriate summations carrying over to the incorrect statements and cash flow statements. These errors do not affect the trial balance as amounts are placed on the correct side but in the wrong account. The examples are errors of principle. These errors are caused due to the violation of accounting principles. Subtypes with example. Treating capital items as revenue item. Like wages paid for the installation of new machinery debited to wages account instead of machinery account. Treating revenue items as capital item. Example, rupees 500 paid for the repairs of an old machinery is debited to machinery account instead of repairs account. Compensating errors. Errors equal in amount but opposite in sense that cancels each other. This is called so because the wrong posting of one account is compensated by the wrong posting of the same amount in another account. And this does not hamper equalizing totals of trial balance. Example, like on May 10, 2018, a sum of rupees 3,000 is paid to Ashok is posted as rupees 300 to the debit of his account, and on May 20, 2018, a sum of rupees 3,000 paid to Kumar has been posted as rupees 300 posted to Kumar, paid to Kumar has been posted to as rupees 3,000 to the debit of his account. Net effect will be 0. Errors may further be classified as one-sided and two-sided errors. One-sided errors are those errors which affect the agreement of the trial balance. These errors affects only one account and only one side, that is debit or credit side of the account. Errors of partial omission, recording transactions with wrong costing and wrong postings are examples of one-sided error. These errors would be rectified with the help of suspense account. Two-sided errors are those errors which do not affect the agreement of trial balance. These errors occur in two or more accounts. Such errors are rectified by posting journal entries. Errors of complete omission, errors of principal, and compensatory errors are examples of two-sided errors. With this, I conclude the lecture. In today's lecture, we have gone through as to what types of errors are committed in accounting, its rectification, etc., and have also made an attempt to understand the errors with example. The complete theory only on errors and its rectification has been looked into. In coming lectures, we will make attempt to detection and rectification of errors, effects of errors, suspense accounts, and examples. I am hopeful and confident that all of you have understood the theory part of it. Thanking you all for your presence and participation. I also thank respected Principal Dr. Shri Ram Kulkarni sir and Vice Principal Shri Praveen Mule sir for guidance, support and opportunity. Thank you.